Hey everyone, John Henry here, and today in the market psychology video, we're going to be taking a look at crude oil post-Brexit news, right? We had the Brexit vote last week. They've had the entire weekend to kind of rip it apart and go over all of the analysis of it and et cetera, et cetera, et cetera. We don't really do that. We're more price action traders, but that is what is going to happen when something big like that occurs. You're going to have analysts from all around the world talking to each other and trying to figure out, what do we do now? And now we come in this morning with a huge gap down. Now, on Friday, we ended the day with a strong spike lower, so we know that sellers were heavily interested last week Friday. We open up today with that big gap down. That shows us that the sellers, even over the weekend, they didn't go anywhere. We open up big gap lower. Sellers are probably going to take some profit, but we need to know that there are going to be more sellers waiting to get in. Sellers don't want to sell this far down, not after a big move like that. They want to wait for it to come back to them, and then they can sell it from there. So we're expecting a little bit of a morning bounce higher, just so that we can sell it right back down again. And that's exactly what happened. We open up, nice little move higher here off of the initial morning candle, and that allowed the sellers to take some profit, the buyers to buy it up a little bit, and it even gave them a secondary option to jump in for another scalp long. But when it started failing to get higher, we started seeing the buyers completely failing to get that move, and you can see they formed somewhat of a ceiling there. That tells us that if they break above that, we should see a breakout move much higher, and that may fill the gap. But if they don't, the sellers are defending their positions, and you're probably going to see this break down to the lows. And this was actually the trade of the day right there, so make sure to watch that. But a beautiful drop right back down to those lows. Now, by the time we get to those lows, we've gotten a lot more information, right? We know now, instead of a strong bear market, we're seeing somewhat of a weak bear market, more of a range, if anything, right? They go higher, they try to break out through those highs, and it fails. When it comes back to the lows, you're probably going to see some buying pressure, assuming that it's a range, and it's likely going to bounce from there. And that's exactly what happened. It hit the lows, bounced right back up. Very nice little bounce play for buyers trying to scalp out a counter trend move. And given that range sentiment, then they start forming a little bit of a wedge on the downside here. Don't be surprised if you start seeing those lows getting bought, assuming that the buyers are thinking, well, yeah, this is a downtrend, but it's a wide enough downtrend back and forth that it's more of a range in a sense that you can buy the low. So you can buy the low there. There is also a sell off the high, and you just keep playing both sides of that channel back and forth until one side fails. Inevitably, right now, the way that this looks is it looks like we may stick with this trend for a while, but it wouldn't really hurt my feelings to see it come back up towards those highs again and give that ceiling another crack. But overall, just a phenomenal combination of not only technical analysis and market psychology, but now you have a big chunk of news coming out on top of it with the Brexit vote. So really interesting how we can combine all of that and still get some beautiful signals for buyers to get in and out throughout that morning. So that's going to do it for me. Hopefully you found it useful. Hopefully you found it interesting, and we'll see you next time.